So we're going to be talking about what is included in the cost of an asset and what happens when you buy multiple assets at the same time. How do you decide what individual assets cost? So let's start. Here we have some facts. Carter Company acquired 3 machines in a package deal, meaning they paid one price for 3 things. The seller charged $210,000. It cost another $15,000 to get it shipped to their location and installed. Carter paid sales taxes. Sometimes the seller pays the sales tax, sometimes the buyer does. So here the buyer paid the sales taxes, and then the buyer also bought an extended warranty on the machines. There's an appraisal indicating what the individual machines were worth, and the question is, what is the cost for each machine? So the first question is, well, which of those costs in that list there count as part of the cost of the machine? So here are the 4 items that they mentioned. We have the invoice from the seller, we have shipping and installation, we have the sales taxes, and we have the extended warranty. So the invoice from the seller and the shipping and installation and the sales taxes are all part of the cost, but repairs and maintenance are not. And so the extended warranty is just a way to prepay the repairs and maintenance. So there's a number of things that can be included in the cost of equipment. Transportation in, insurance while it's being transported, sales commissions, installation costs, testing if you had to test it, anything that you incur to get it ready for use. But cost, once it's in use, are not part of the cost of the asset. Those are the cost of operating it. So the extended warranty would not be included in the cost. So the total cost of the basket of 3 machines is $226,000. But how do we know what each individual machine cost? And that's important because the machines might be depreciated over different lives, and one of them might be sold and the other 2 kept sometime during their life. And so we need the carrying value or the book value of the individual assets. We can't just book them as a lump. So we want to spread that $226 to the 3 machines. So how do we do that? The procedure is to spread the cost based on the relative fair market value. What's relative fair market value? Well, you take the fair value of each of the assets and you figure out what portion is that of the total fair value. So in this case, machine 1, I'll show you where that number came from, took 60 and divided it by the 250, and that's 24% of the total, and 36% of the total, and 40% of the total. And so we then take that percentage of the total fair value and multiply that times the cost for each of the 3 assets, and that will give us the cost of that asset. So I took the 24%, multiplied it times the original cost of the basket, the 226 that we computed, and get the 54,240, and I did that for each of the 3 machines. Now you can check your answer to see if it's right by adding those 3 up and making sure they come back to the original cost that you were supposed to be spreading to your 3 assets. So let me check my answer here, and I do get the 226. So that's telling me that my math is probably correct and I didn't do something strange. So to review, putting it all together here for you, we added up all the items that should be included in the asset cost. We then spread that cost based on the relative fair market value. So we got the relative fair market value and multiplied it times the cost.